welcome to the game plan. My name is Gareth Soloway from verifiedinvesting.com. Thank you for joining me. We're going to get into some hardcore charting to take you into today's action. It's Friday, but there is clearly things going on we need to discuss. So without further delay, let's get right over to it. We're going to take a look at what I talked about yesterday. So remember yesterday I said was a very pivotal day. The prior day, it doesn't look big here, but we had seen a big reversal candle. The chart here on the SPY, or the S&P 500, had opened on Wednesday, right? It had opened above this key resistance area right here, and it had closed back below. Now, when you think about a technical indicator or a chart pattern, that is very important, especially after such a huge move to the upside. In other words, to simplify it, we had a huge move up. The markets opened above resistance, thinking they could break out, and instead it was pummeled to the downside. And by the end of the day, we had a reversal day closing back below resistance. Now, this is the kicker. Yesterday, so that was on Wednesday. Coming into Thursday yesterday, we talked about how you needed to see follow through for the bears to continue. So the bulls were in charge all the way up here, even with the gap up, and then the bears took control on Wednesday with the reversal day. Now the kicker is this, right? It's like a soap opera. What we saw yesterday was initially great selling. The tech stocks were getting pounded. The bulls were running for the hills, and the bears were in control. But then, late in the day, and this is like, this is like some suspense thriller when you're coming to the charts. Late in the day, we saw this massive buy program come into the S&P 500. I'm going to flip over here, guys. Take a look. This is the 10-minute chart of the S&P 500, and look at what happened. So S&P was down all day, down, little bit of a bounce, retraced, and then boom, to the upside. And amazingly, the bulls were able to wrestle control away to back into control of the markets. Now again, yes, technology was still down. We certainly are seeing some rotation in capital, but ultimately this rally here puts it back into the court of the bulls being in control of the S&P and the NASDAQ versus the bears. Now, I did just tell my traders out there on the trading floor that there is one scenario where the bears could come back today and wrestle control back going into next week. To do that, what needs to happen? If we flip back to this chart, we would have to have a close on the S&P 500 back at yesterday's low or below. Okay, so again, if you're looking for how to view the market on a technical basis going into next week, being today's Friday, look for that. If we close down a little bit but not at the lows, bulls still have control. If we close at the lows from yesterday, essentially negating that entire late day rally, then you talk about now the bears maybe are coming back in and taking control. All right, so I really wanted to cover that because these are the little things as a technical trader that honestly are unbelievably important to view. You have to know who's in control. Which angle is the prominent angle to the market? Is it further upside or is it downside now? Markets are extended. No one's arguing that. But again, doesn't mean markets pull back when they're extended. I've seen markets go much, much further to the upside than this even. But again, the bulls are kind of trying to maintain control. The bears are trying to fight back and get control. All right. Going into the price action yesterday here, guys, so let's take a look. This is the 10-year yield. Notice the 10-year yield actually bounced yesterday, which made for why the markets were selling off, right? When the yields go up, the market tends to go down, which made yesterday's late day surge even more intriguing. Now, just a little side note. Yesterday's late day surge was most likely due. There was an imbalance of $6.5 billion. So $6.5 billion had to be bought into the end of the day. And it was also the end of the month. So you had window dressing. You had a lot of other shenanigans being played that helped contribute to that rally to the upside in the markets late in the day. Again, yields were up, didn't matter yesterday. That late day buy program took it up regardless of yields being up, which usually causes markets to go down. Today, we're basically having a flat day on the yield. If we flip over to the US dollar, this is the dollar 10-minute chart, you can see we're generally trending up. If we go to the daily chart, same kind of deal. We're trending up just a little bit. I could see the dollar, by the way, rallying back into this area here. That would not be unforeseen or unusual, but I still think eventually the dollar is heading down to this mega support around 101.50. Okay, so we've covered that. Now again, going back to the NASDAQ, let's flip over to the NASDAQ 100. The NASDAQ 100 here, guys, if we zoom in, you could see again, the NASDAQ 100 actually had a down day yesterday. Nvidia was down about 3% even with that late day rally. We saw Meta down quite a bit. All of these stocks were into resistance. We'll cover the Meta chart in just a minute. But look at the trend line, right? So this again, just like the S&P, we're at some pivotal levels and we're dealing with it. We've touched this line here. We were up here. We reversed. Yes, yesterday was a down day on the NASDAQ 100, which makes it slightly less bullish and more bearish than the S&P, which had a nice gain by the end of the day. But again, anytime you create a tail like this, where it's a long tail and the rally comes up, it still means the bulls are fighting. They're still trying to keep control of this market. Okay, now ultimately, I'm just going to be fair with you guys. I still think the markets are due for a corrective move, but again, the charts are what tell me. Always remember that, guys. What you think, what I think doesn't really matter. What my gut says, what my heart says, what my mind says, no one cares, frankly. The markets and the charts. The charts are the only pure form of honesty we have. And we have to remember that. It doesn't matter if I'm like, oh, that was shady or oh, that was this. It is what it is. The chart is the chart. Doesn't matter. When you look a year from now, you're not going to remember, oh, it was a buy program end of day. The chart pattern was the chart pattern. That's just the nature of it. Too many of us impose our views onto the market and onto the charts, trying to make it be a certain way, when in reality, you have to just say, whatever happened, happened. My job is to interpret that, not to put my emotion or thoughts or feelings into it. Okay. Let's go into a couple charts. Quickly, I just want to show you CRM. Remember CRM, I talked about these two trend lines here and where you were going to have resistance. Yesterday, this was literally awesome. I don't know if any of you guys took this trade at the open, but we opened up here right into those levels. We sold off literally almost $10. Then that buy program lifted it up. But look at how we stopped right at that level yesterday in the game plan. You can go back to it. Obviously, it's all public record on my YouTube channel. You can obviously see I talked about this area right here as resistance. That's right where CRM stopped. Next, let's take a look at Ulta. Ulta Beauty reported earnings yesterday after the close. Take a look at this pre-market and after-hours data. Big pop on this, basically from 425 to 477. The question is, where is this going to have resistance? Well, let's flip it over to the daily chart. The only chart level I see, right, if we look at this, we have a big move up. We kind of came down. We started to rally. One thing we do know is that we're trading right here around 477. That's where we currently are pre-market. The obvious pivot point that you can see on this is right here, that pivot point. That pivot point is at approximately 487. Okay, so 487. That's an approximation, but that would be your first technical resistance. So to be honest, you're at 477, so there could be another $10 of upside before Ulta, ULTA is the symbol, runs into resistance here. All right, now if it gets up there, will I look to short it myself? I'm going to obviously be looking at the factors that I have there. How does it get there? But that would be the first level I would consider on the short side. Next chart we go to is Pfizer. Pfizer getting some negative news this morning. If we flip over to the intraday here, take a look at this drop on Pfizer. A nice drop down to about $28.98 after closing above 30. So that's a pretty good drop for Pfizer. But ultimately, what are we talking about here? The stock has already been beaten down. And again, look at these trend lines down here that I have. So I'm actually in the camp that this is starting to look intriguing as a swing trade opportunity. If I flip over to this chart, look at this bigger chart right here. right? So we have pivot points going back here. We have pivots all the way over here, right through here, and right in that area. We have this low matching to the here and here and here. And so ultimately, we know that on COVID and the COVID vaccine, this was at $60. It's now 50% decline, right? So it's down 50%, but now below this $30 level, $28 to $29, I actually think this looks intriguing, not so much as a day trade. To be honest, I have no interest in it as a day trade today, but as a swing trade, these levels start to become intriguing. In addition, we can also make a case, if I erase these lines and go back to the live chart, we can also make a case that there's a big level. Look at this right here. Look at these lows here. These lows right here, all the way through here, right through your COVID low, and if you connect them, that is right around $27. So again, we're trading just below 29. I do think there's potential for it to go down to maybe 27, but somewhere in this range, it honestly starts to get interesting as a swing trade or as a longer term investment. Pays a pretty good dividend too. So again, chart-wise, starts to look intriguing, but again, somewhere between 28 and 27, I would say maybe a little bit below 27, that starts to look intriguing. All right, quickly touching on Apple, guys. Apple again continues to struggle at this technical level. We talked about this obviously before. This was your big level of resistance. You started to curl over. Where would Apple pull back to? Let's say the bears start to control this thing again. Where would you pull back to? We're looking at this area right in here. And again, that would be around 180 on the chart. So again, if you do get a corrective move, support starts to come in at around 180, give or take, right in that vicinity. Then you would see, does support hold, right? We don't know. But you obviously, as a technician, we don't say, oh, I think it's going to break. Oh, I think. No. Support is support. Until it's broken, you assume it holds. Resistance is resistance. Until it's broken, you assume it's going to hold, right? You have to do that as a technician. Otherwise, you start utilizing really non-realistic techniques, which will ultimately make you lose money as an investor and a trader. Lastly, I want to show you Microsoft, guys. This is one of the craziest charts out there. Really, to be honest, to think about a stock like Microsoft going from 300 down here, basically 300 to $380. I mean, that's a massive, massive, massive move, and it's almost a $3 trillion name. So, I mean, in terms of did I ever think that Microsoft would make this type of move? And the answer is no, I honestly didn't. And just looking at this, guys, from this low, that's a 25% move to the upside. A $3 trillion stock from late September to current, 25% move. Incredible. But having said that, we know one thing. We know that it's into major resistance. Zooming out on the chart, we have the levels right here. And so I continue to think Microsoft is at a topping point right in here, right there. It's hitting that factor. One of the things to watch for, all right, I'll give you guys something very interesting to watch for. See this candle today? So today, this is the weekly candle. It's probably a little hard to see, but let me zoom in. If we were to sell off, let's say we sold off today on Microsoft and closed around 376, you would get a topping tail on the weekly. That is a reversal weekly signal. To me, that would be significant considering it's coming off the trend line right there. All right, let's keep rocking and rolling. I wanted to touch on Nvidia here, guys. Nvidia did get hammered yesterday. Beautiful drop. Again, did the chart kind of signal that this was the likely highest probability outcome? The answer is yes. Simply put, trend line to trend line, parallel lines, by the way, perfectly parallel lines going all the way back. And we know we hit it here and pulled back, hit it here, pulled back. So what do you expect, right? Again, you're not reinventing the wheel. You're looking at history and saying, every time this line hits, it pulls back. Hits, pulls back. So what do you expect here? Pull back, right? That's really all you're doing here. You're just looking at this and saying what usually happens at this level, and ultimately that seems to be happening. Now, again, one thing to keep an eye on here is basically you also have a secondary parallel right here, right? And here's your middle point right here. So this is going to be support around 425, 420 if we continue down. If that breaks, then you start going to this middle parallel here at around 370. And then if that breaks, eventually there's a gap fill around 300. Again, I've said this to you guys many streams. Nvidia is crushing it right now, but just like Tesla, the competition is coming, right? Think about this. Tesla, we know, had amazing cars a few years ago that there was no competition that could come close. Now you have serious competition, and that's causing them to drop their prices. Their margins are going down. Same thing will happen to Nvidia. It may take a year or two, but it will happen, and eventually Nvidia will come down and at least fill this $300 gap. Question is how long, right? And that I honestly don't know. 6 months, a year, 18 months, we will find out. Okay. Let's jump over here to this other chart. So I want to go over Bitcoin, guys. Again, Bitcoin, everyone getting super excited today about Bitcoin as it's breaking up over this level. It made a new high, new 52-week high on the charts. But the negative here is this, right, is that we've seen pierces of this line multiple times. In fact, I want to go over and zoom in, right? So, I mean, if we just look at this, we have here pierce, here pierce, here pierce, here pierce, and today pierce. So this isn't abnormal, and it's very early in the day. And so while I agree, I do still favor a breakout on Bitcoin, you have to say that we need to see where it is per the close, right? And then also over the weekend, volume gets lighter, and I don't necessarily trust it. But ultimately, where does today's candle close? Because look, it was all the way up here, and now it's all the way back down here, right? We're only about $300 over this 38,000 level. So we need to see a daily close that confirms the next day or so, and then we can talk about further upside. Now, some of you guys have been asking about, well, where is your max upside on Bitcoin? All right, now ultimately, I still think, by the way, and I've said this before, people have been like, oh, well, what about 15,000 again, or 12 or 10,000? Remember, there's one case where Bitcoin goes to 15 to 12 to 10. The only case that happens, in my mind, is if the stock market collapses 50 to 60%. Like basically, if we get in a scenario where we see a 2008, 2009 scenario where you have a massive run for safety, where there's a massive collapse, let's say we have inflation staying high, the economy starts to crater, the Fed can't lower rates enough because inflation is still high or whatever it may be, that would be a scenario where Bitcoin could still head down to 15, 12, or 10. Other than that, I don't see it anymore. I really do not. Okay, but let's talk about upside. Where could Bitcoin go on the upside? To do this, check this out. We're going to zoom out on the chart. In fact, let's even go to the weekly chart. All right, so if we go to the weekly chart here, there's a couple lines of confluence in the chart that I do think are worth paying attention to. So basically what I did was I took this high going back, I believe this is the 2019 high here, right? If we connect that high through the lows of the bull market here, through the lows of this pullback, and that line is extended out, you get a pivot point here. That pivot point also coincides with this high, which is right at that same level. To throw even more confluence on it, and again, the more confluence or factors you get, the bigger the level is. What I want to show you guys is a Fibonacci retrace. If we take Fibonacci, right, and we bring it to the highest point, we're going to do a Fibonacci retrace here. If we drag it down to the lows, right, look at this. And this, again, folks, hopefully you guys can see this. But basically, this is your 618 right here. And look at the line. It aligns perfectly with that point that I was just talking about on the charts. Okay, so again, you have two trend lines and a Fibonacci retrace, the 618 Fibonacci retrace. They basically coincide at 48 to 49,000. We'll call it even 50,000. So for me, that's your best bull case if the approval of the spot goes through, if you continue to see the stock market hold up, if it's risk on, if more money printing comes in the next 6 months or so, you could see 48 to 50,000. Okay? All right, so just a good little update on that. I know some of you guys were asking me about some longer term projections on that chart. Quickly going over gold, not much new to report here. Gold remains relatively strong. We're just consolidating here. Remember, consolidation makes a healthy market. So again, when you have a move up on gold like we've seen, right? So look at this. Big move up, needed to consolidate. That's healthy. It allows for the next move up. Now you need to consolidate again before reattacking the all-time highs on gold. So I do think gold, again, by year end, I really do think it attacks the all-time highs. Whether it breaks through or not by year end, I don't know, but ultimately I do think that happens. Natural gas continues to struggle here, guys. So again, natural gas has been a little bit of a conundrum to me, as I said in the last couple streams. It is still trying to hold this support down here, but ultimately I need to see it recapture, let's say in the next week, 290 to 295. We need to get back above this level. We've gone below. Technically, believe it or not, we haven't confirmed below because, again, you can see big candle, we haven't closed below, but we could confirm today. But I need to see it move back to the upside and get back above that level. Tesla stock today is falling, so quickly looking at Tesla, you can see again rolling over pre-market. This again has to do with they finally unveiled and are starting to ship the new Cybertruck. The prices that they came in with were higher than expected. And I think the reason why the stock is selling on that is that, you know, number one is there's a lot of alternative trucks that are electric now. It's not saying they're going to be as good as the Cybertruck. Maybe the Cybertruck is better, but at a higher price point, you're giving the opportunity for people to say, oh, I'll take the F-150 Lightning at a cheaper price point versus this. And I think that's concerning to investors here, that there may be more people that are saying, you know what, maybe I'm not going to spend. I think the base model is now, with all the normal things, is now like above $60,000. And again, you know, you're coming into an economy that is likely slipping into recession. How many people can afford that, right? Or will continue to be able to afford it? Quickly just looking here at oil. Oil not doing much. OPEC Plus announcing a 1 million barrel cut. That doesn't even move the needle. We talked about that yesterday, guys, so nothing to do there. But ultimately, again, oil holding steady. All right, jumping back to center screen, guys. Lots to discuss. The biggest thing for me today is watching the stock market. Where does the stock market ultimately end up, right? Are we able to sell off to yesterday's lows? Bears get control. If not, the bulls maintain control into tomorrow, or I shouldn't say tomorrow, into next week. I will be back, as always, Monday at 9 a.m. I wanted to do a quick thank you to NordVPN and iTrust Capital for being sponsors. As always, guys, thank you guys for sponsoring this stream. Thank you for those of you that are viewing. I wish you the most amazing weekend. Be happy, be healthy. Remember, I will be here guiding you as best as I can in these wild market times. You guys take care.